Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello guys, and welcome back. Bitcoin has started to make a bit of a move, so let's take a look at where we currently stand on the higher timeframes and also what is happening on the lower timeframes. Once again, I want to show this chart. It displays historical Bitcoin bottoms based on different types of data. For example, Bitcoin production cost, the power law model, and another metric that I personally follow. What I've pointed out in previous videos is that these bottom areas historically align with the typical 70 to 80% drawdowns that Bitcoin experiences during bear markets. In other words, these levels usually line up with the historical percentage retracements we have seen in previous cycles. However, this time, things look a bit different. The bottom areas suggested by these data models are actually much higher than the usual 80% drawdown levels. If we simply measure a 70% or 80% retracement from the top, we would end up far below the data-based bottom zones that we currently have. Because of that, my approach is to go step by step and follow what has worked in the past. That means I will continue to respect these data points until the market proves them wrong. So my current conclusion is that we may not get the typical 80% bear market drawdown this time. Only if these metrics clearly break to the downside would that mean I'm wrong and that something different is happening in this cycle. Until that happens, these areas remain the zones where I will be looking for a potential bottom, whether it's around the production cost level or the lower band, which does not necessarily have to be touched. Now, as I've shown a few times before, Bitcoin doesn't have to immediately reverse from this area. Price could range for a while, maybe move up a bit, and later retest this level closer to the 4-year cycle timing. In that scenario, we could even see a higher low forming, which would probably surprise a lot of people. Of course, there is also the alternative scenario where price moves further down. If that happens, the next areas to watch would be the next data point below and the support and resistance level that I have marked on the chart as additional confluence. From there, I would ideally like to see a strong reaction and a move higher. This might not follow the drawings perfectly, but overall, if history repeats and we continue to rely on data from previous cycles, this is typically where bottoms form before a larger move upward begins. You can also see that I have updated the numbers on this chart. If you watched the previous video, you will notice that the numbers are slightly different now. The reason is that the estimated bottom area is slowly but steadily rising. So the longer price spends time without making a deeper move down, the greater the chance that we simply form a higher low. And even if we do see another move down, the key thing would be that we don't get real closes below the previous lows. This is not a chart that we need to look at every single day. It's more something to check maybe once per week or whenever we get a larger move down. Otherwise, it's enough to revisit it from time to time. All right, let's move on to the next chart. This one shows the 202-day cycle that we marked out earlier, based on the basket dominant cycle that we took from the Cycle YouTube channel. Here we were specifically waiting for the date around March 2nd. I marked the entire area in green because that is typically the window where a bottom can form. And so far, that's exactly what we've seen. Price came down and ranged in this area for multiple weeks. Then we reached the cycle date, and during that same week, we saw this push to the upside. So overall, it was a very reasonable plan to look for a bottom and potential long opportunities in that region. At the time, a lot of people here around these lows were calling for 50K or even lower prices. And yes, based on the data we know, it is possible that Bitcoin could reach those levels at some point. But timing is extremely important in trading. And timing-wise, those bearish calls were completely wrong because they were expecting lower prices right inside the cycle window where bottoms usually form. So it was clearly the wrong moment to be bearish at support. Now what we have is a bounce. Technically, we are still inside the cycle time window. Yes, we've seen a nice reaction so far, But as always, for proper confirmation, we would still need a breakout. And at the moment, we don't have that yet. If price starts trading outside of this range, then we can begin focusing on higher levels and the next cycle timing window where highs typically form. Because of that, I plan to continue tracking this 202-day cycle going forward. Over time, we will see how useful it turns out to be, not only for me, but also for viewers who are following along. Timing is an extremely important factor in trading. Being bullish or bearish at the wrong time can cost you a lot of money. I know that from experience. For example, I mentioned previously that I had a long trade inside this range on the way down, and that trade didn't work out. I openly shared that I was wrong there, and that's important to me. I don't just show the good results, I also show the mistakes I make. So I can honestly say from experience that being on the wrong side of timing can cost you a lot. Anyway, now we have this bounce, and the next step is to observe what is happening on the lower time frames. We want to see how this week closes and which local levels are forming. With that, let's switch to the next chart. Here we have the yearly price time Gann chart. What we are looking at here is the moment when price meets time. The last time that happened was here, and we saw a very nice reaction from that level. At the same time, I was also watching these circles on the chart. Price was basically grinding down along them while it was trading below them, and once we saw the break above, those same levels started acting as support, and price moved up to the next levels. Right now, price is hitting the range high, but it is also interacting with some important price levels on this chart. First, we have the horizontal levels, and then we have this time trend line. This time trend line can be very useful if, for example, we see price forming higher lows or lower highs along it, similar to how price was grinding along the circles before. In that case, price can slowly grind up or down along this structure. So what this means for me right now is that I don't really have a specific timing signal for a top yet. I can still use the levels on this chart as confluence, and I'm confident they will continue to be respected because I've been using this chart for many years. You can treat it level by level. If one breaks, you simply look to the next one. However, the most important areas for me are still the moments when price meets time. Those are usually the points where I start looking for the next bigger reaction. The next important timing point here is closer to the end of the month. Interestingly, around that same period, we would also have the next daily cycle timing window, which runs from about 52 days to 66 days. So if price just chops around here for a while, that would actually fit well with the idea that the next meaningful low could form inside that window. Price could either chop around here or move a bit higher first. But once it starts hitting the yearly Fibonacci time levels, whether measured from the highs or the lows, that's where I start paying much closer attention for the next bigger move. Until then, this chart has been helpful for tracking the structure, but now it's more a matter of waiting for the next time window. Another thing I'm watching here is the daily cycle midpoint that I mentioned earlier. From one cycle low to the next cycle low, we have a midpoint at roughly 50%. Based on that midpoint, we want to observe whether Bitcoin forms a high before or after that 50% mark. If the high forms before the midpoint, then we could expect some slower, choppy movement and possibly a gradual move down again, especially if structure confirms that by losing some key levels. If price makes a new high after the 50% mark, then the retracement could happen faster into the next time window. That information will later help us understand whether we should expect a slower move or be prepared for a sharper reversal. But that part is still a bit further away. For now, the main focus is simply to watch what price does here, whether it is able to make a new high after the midpoint, or whether it fails and starts losing levels, which could lead to some choppy downside movement. That brings us to the next chart, which shows our range. Here we have the range low, the range high, and the midpoint of the range, along with a few levels of interest. We also have our monthly statistics levels and the average monthly timing. So far, what we've seen is that the month opened with a small wick to the downside and then started moving higher. That's perfectly fine, but what we now need to keep an eye on is the average monthly high timing. In downtrends, we often see the monthly high form during the first 2 weeks of the month. Since price is currently rising, I'm interested in seeing which level it will hit during this timing window. Ideally, I would like to see price at least touch the average monthly level. To be fair, we are already very close to the bearish wick average, which is the area where the monthly high often forms. Since it's an average, it's more of a zone than an exact level, but the precise level itself is slightly higher. What this means is that if price moves higher, or even if it simply reaches the average timing for a downtrend high, then I need to start looking for signs of weakness, which is basically what I'm doing right now. If that ends up being the monthly high, then price could move down again. And depending on how far we are into the monthly timing window, we could then start looking for a new monthly low, or potentially just another range if the structure doesn't break. In general, once the average timing for both the monthly high and low has passed, I usually don't expect a new monthly high or low to form unless new information enters the market. Now, looking at the levels inside this range, the two most important areas right now are the range high breakout attempt, the range midpoint, which also aligns with the monthly open hours. So those are the main areas of interest for now. For example, if I am short, the range midpoint becomes a natural target. And if price moves lower, then we can simply work level by level. If we switch the chart and check the structure levels, we can also see that there are some clear support and resistance zones forming. First, we have this daily support resistance level. If I mark it out and extend it to the left, you can see that it's a very clean SR level. Then on the 3-day time frame, we have another SR level forming in roughly the same area. So the range midpoint clearly becomes a very important level to watch. The better long trades are usually from below that level, because in that case, the position has some protection from the structure. However, if this level is lost, then I would start looking toward the intra-range lows and possibly even the overall range low. Again, he's just moving level by level. So from my perspective right now, I would be more interested in looking for a long at the range midpoint or below it. Of course, the level above could still act as support, and price could move higher from here. But in that case, I simply keep the long runners that I already have from lower levels and let them ride. Only if price comes back down into the midpoint zone or the levels below would I start looking for a new long opportunity. So for now, I'm not interested in opening new longs near the range high. However, I was interested in looking for a short, which means I was watching for a deviation or an SFP of the highs. And that brings us to the lower time frames. So just to repeat the plan again, for now, I let my long runners continue running. If price holds this area, I'll look for higher levels, such as the higher time frame SR zones and the order block above. If I take a short, I will take profits on the way down and then wait for new information and the next timing window where we might get stronger confluence again. And with that, on the next chart, we can now look at the lower time frames and the trades. Here, we already had a few trades running from the lows, including the short that hit its take profit at the mid-range, and then another long that moved up to the range high. Of course, once price reached the range high, I took most of the profit from that long position because that was the target for the trade. I left a small runner open, similar to the other trade from lower levels. After that, I started waiting for some weakness on the lower time frames. When I saw price beginning to struggle and forming some bearish candle structures on the 2-hour time frame, and at the same time, I noticed bearish market maker divergence, MMD, with Ethereum. That was the signal for me to take the short position and bet on a deviation of the highs, or at least another move down before the market decides whether to move higher or lower from there. That brings us to the current price action. By the way, the short trade was shared in the Telegram group, so feel free to check it out if you want to learn more. Right now, I'm also working on my first educational video, which I hope to finish soon. I'm doing my best to get it done, but it will likely be a 3 to 5 hour long video where I go through one of my strategies in detail. In that video, I will explain the strategy itself, show several examples, and also demonstrate how you can simulate possible outcomes such as maximum drawdown, expected value, and long-term equity development. In other words, it will function as a real risk management tool. Usually, what you hear in trading is something like, just risk 1% per trade. But in reality, that advice is often given to retail traders without deeper analysis. If you actually journal your trades properly and track your strategy, testing rules, collecting statistics, and recording outcomes, you can then use that data to simulate the performance of your strategy. For example, if you simulate 700 trades, you can clearly see how much risk your strategy can realistically handle. Instead of relying on feelings or random setups, you base your risk decisions on real historical data from your own system. You can also see whether your account could actually survive the drawdowns that come with that level of risk. And if the drawdown is too large, you can experiment with different risk levels until you find one that fits both the strategy and your personal tolerance. So if you are building a strategy with specific rules, the idea is not to blindly trade every bullish or bearish signal and simply hope for good results. Instead, you journal the data, simulate best and worst case scenarios, and build your risk management around those results. That is essentially a true stress test for a trading strategy. I don't think there are many places where people explain this properly, and that will be a big part of the upcoming video. Along with that, I'll show several statistics, explain the strategy, and also introduce another strategy that can be tested and improved. One of the strategies I personally use will also be shared in the video. So if you're interested in that kind of content, make sure to join. I hope the video will be ready soon. Right now, I'm reworking a few things and adding more content, so it's taking a bit longer than planned, but the final result should be much better. Hopefully it will be ready sometime next week. Now let's go back to the chart. At the moment, my main idea is to short the move down toward the mid-range, taking profits on the way down. The first step was securing the trade that was opened yesterday. After that, the next step was to turn it into a guaranteed winning trade. During the night, price reached a level where I took some additional profit, and now I'm holding about a 40% runner. But the trade is already secured as a win, even if it gets stopped out. So the next action for me is the following. First, I will look for take profits close to the range midpoint. I may also consider another take profit on the way down, but ideally, I would like to see price reach at least the monthly open as the next target. However, as shown earlier on the daily chart, we also have a support area in that region, so I need to watch the reaction there carefully. If price shows strength at that support, I will likely secure more profits. At the same time, that area is also where I will start looking for long opportunities. The best long levels would be below my existing entry because that would give the trade better positioning. But here is how I plan to manage it. If price moves down and hits my short take profit levels, I will look for a local timeframe setup. If a setup appears, I may add a small position to my existing long. Not too much, because I still want my average entry to remain below that SR level. In that case, I would have a slightly larger long position again. If the level holds, that long could turn into another runner where I can take partial profits on the way up while letting the rest ride. The reason I call this approach safe is because when I add only a small amount to the position, my average entry moves slightly higher, but I still keep enough room for decision making. If I see price starting to lose the support level, I can close the trade earlier and avoid taking a loss. And if the level does break, then as mentioned before, I would simply start looking for the next trade opportunities below. That's the plan for the long side. For the short side, I would like to see the remaining take profits hit. A new short would only interest me if price breaks above the last high. If that happens, I would look for a reaction there. If no reaction appears, then I simply wait for the next higher timeframe level. Currently, price has moved back inside the range, so the first area to watch on a move up is basically the range high. For today, that area also aligns with the daily average level, which creates a nice confluence zone. If volatility stays low, I wouldn't expect a strong break higher or lower from here. Only if volatility increases would we likely see a breakout. Until then, this remains a solid confluence area. Personally, I will not add to the short anymore. At this point, I'm simply letting the trade play out. I waited patiently for the long, patiently for the take profits, and patiently for the short entry. Now it's time to be patient again and let the trade develop while it is already a secured win. With that said, I hope this update was helpful. We were waiting for this level, it was planned in advance, and I shared what I was looking for at these levels. I also shared the trades in Discord and Telegram when I took action. Now it's simply a matter of managing the trades and preparing for the next levels. I wish you a nice weekend, and I'll see you in the next one.